Good morning, everybody. Switch to some charts before I forget. Okay. So futures have reached a reference point. It's the current contract, 50-day moving average, typically a institutional point of reference. Not an exact point, but you can see how over the last year, if I was to scroll back, it has been a very good reference point. Now, granted, it is subjective because it moves around. If I go to SPX, if I go to SPY, maybe it's not going to be there, but as you can see, the futures touched it and backed off. And so now it's jiggling around. We've got a broken uptrend. Prices have broken down through these prior swing lows. So this trend is no longer up. How far can it get? We talked about this earlier in the week. How far from this turn can this push up, let's say, into this area? So that's where it fell from. The further it pushes up in there, the more respectful the rally has to be taken off of this low to get that far. Now, if it just stops here today and starts jiggling around, that's going to be more bearish. Now, we would say, well, it could come up to that minor resistance point, meaning that area that it held at, which was just above the 50, and then fell. Well, this is subjective as a reference point. And to reinforce that, looking at 4440, 4440, there is nothing over here. That was an aha moment for me, as we say, light bulb moment, where you've been looking at something as being real, let me just say, that the majorities talk about. I mean, we talk about it because it's so widely followed. But after seeing prices push through this type of reference point time and time again and scratching my head, how is this possible? There must be something more to this. And, the markets and technical analysis is really a journey in trying to uncover the truth. And it's filled with potholes and curves along the way. And this is just one of them. In any event, the 50 is subjective. Minor resistance is subjective. In reality, there is little to nothing to stop this from going up because of the way it came down. Now, the way this came down obviously is bearish. And if sellers are really serious about this, right, this wasn't just a fluke type of thing, which there have been some of these in the past, of course, this is going to make a turn in this area. And we're going to get in the next couple of days some type of a reversal bar. Maybe this is the beginning of it. We shall see. So this is the area where we're going to look for things to begin to turn around. And as we look at the hourly chart, the MTS concept is, well, we want to see it create resistance. And as this is moving up and making these pivots, it's creating resistance. And so far, well, here, it got through it. So now the factory work continues. Well, can it get through that resistance and come up to that area up there, right, which we said there's nothing there? But should it turn here, which is where it should turn, right? We don't have evidence of that on a smaller time frame yet. Should this turn, right, one of the things we're going to look for is, does it just barely take out that high and roll back over? The concept of slowing momentum, where the distance between the highs become tighter or narrower, they're closer together. And that's what, the indicator aficionados, what they look at and call a bearish divergence. We just look at the price chart rather than looking at a information that is just trying to tell you what's going on here. May as well just look at what's going on there. So that's what we'll be looking for in the coming days, if that'll, does make the turn, or whether this backing off here at the moment is the beginnings of that turn, which is say it really didn't get all that far off of the low, even though this was a wide range bar. So looking at the, we'll call it cash markets, and you see the unfilled gap up there, and where is it going to open? Well, we look at the spiders and see they're doing a little nosedive here at 436. McGraw always has good information. 4430 is the big end of the month JPM hedge trade put on 3 months ago. Well, I didn't know that. And so what is their position there, McGraw? I don't know. If we look at SPX options and go out, I guess, to the next monthly expiration, and there's a huge open interest there, is what we would look for. And they're short. 430, 430. And isn't it interesting that these interesting pieces of information just line up with the charts, right? So when McGraw brought my attention to gamma and this thing, I was like, and he knew Greg's probably not going to look at this stuff, but I did. I started to find it interesting. It took me a month or so to start looking at it. And anyway, this thing of high open interest in SPX and using that aligned with charts and even intraday, I found it to be valuable information. So we will see what happens there around that 430 level. And so we'll see where this lines up today. Let me go back to this little topping pattern here for, it's kind of, I guess it went up overnight. Yeah, it went up overnight to 442. And that was just within this range here. So really no big deal with this backing off that's going on here so far. It's not breaking below these lows. It's just trading inside this level where it's going to open up. So at the end of the day, things were a bit of a mess. With the news, the Fed news, it ripped, went down, up, down, up. So this jiggling around, creating this resistance area. The question will be, well, can it get back above it, or is it going back down into the intraday void below? And so if it can't fill this gap, that's going to be bearish. Well, that's one way to look at what's going on here over the next few days. So McGraw's telling us, I'll share this with those on YouTube. He's saying, so if it goes in the money, where's SPX? If this goes in the money, right, trading into here, and stays there, could be rocket fuel, I guess, to drive it up. Not today, maybe, but closer to the end of the expiration, more important. Okay, so we'll see. So the way, for those of you that aren't familiar with this idea of high open interest in a particular strike, and this is applicable to individual stocks that are very actively traded. What you find is that when prices reach that strike, which, this is an overhead strike, and it tends to act as a resistance level. If you see this thing go tight, I don't know if there's a tight pattern here over the last few days. Scrolling back, things have been pretty erratic. I don't want to spend too much time, but I think this isn't exactly what I want. But if you see things, then it's really not. But if you see prices just get tight right at that inflection point, which communicates a battle is going on there, well, that's the rocket fuel that if it starts moving up, that unwinds that option position where the owner of those options and market makers start to unwind that position, and it could drive it very quickly in a direction. So it's a great concept. Obviously you have to be aware of these different strikes so SPX is so widely followed, but we've seen this happen in Tesla or AMC or individual stocks. So looking at this high open interest at certain strikes, and how high is high? Well, it just jumps out at you. It's like, and I'm just making up examples here, whereas like all of a sudden at this strike, there's 15,000 open interest and everything around it, is like 500, 2,000. It just jumps out at you. It's obvious. And so when it reaches that point and things just get tight on the chart, it's like something's going to pop. So good information. Remember that 430 level that McGraw shared with us. We'll see, if it actually gets up there. It's not too far away, but it's in that area of the unfilled gap in the 50 MA. All right, let's go on to others. Qs. They're up here today, backing off already. That's really not a wide range bar because that's a wide range bar, but it's making a turn and we're just getting jiggles here. Things are backing off. Things are going to continue to be erratic, but if this can't get any further today and this thing closes this way, I'm going to start thinking, measured move, or, at least that 100 MA, which is lined up with that pivot. So we'll see how today unfolds. When you get these kind of turns after a big drop, they look so convincing that they can just turn back around. And we've kind of been programmed into thinking that way because all year long, every time we get one of these nasty drops, the market just reverses and goes right back up again. So it might be different this time. And, one of the things that I wanted to share with you that I was looking at different tea leaves, so to speak, what's going on, and, as the markets have been popping up here, that these yield curves are starting to drop rather quickly. So some of these are like looking at some longer term versus more short term. And, this is very wide apart. So it's relatively stable, but these shorter ones are tightening up quite a bit. And I saw the euro popping pretty big because it came down to support McGraw. We could take a look at that. So there are things going on. This is the obvious, right? This kind of drop in the market. And there are other things going on that are less obvious, meaning not as many people look at these yield curves versus, the market had a nasty drop, and so the media talks about, the market's up. They were talking this morning. Well, now it's backed off a little bit. So they act like, scalpers on the news day to day there, or intraday. So that is a little bit of an underlying concern, talking about the Fed tapering or not. But you can see that 3-month yields are now falling. And that's because the market believes there's trouble. So they're going to safety. And we saw the trouble. This is a representation of money flowing into a safe place where, buying these short-term interest instruments and the yields coming down. So, we're in this seasonal period. So this was somewhat anticipated. Doesn't always happen. All right, so looking at the places, transports, right? They didn't bounce much yesterday, stable, just hanging around here under the 200. Dow, popped there a little bit, backed off quite a bit. Looking at the futures, you can see they're just flip-flopping around here. They're under the 100, an easy way of recognizing relative strength or weakness. Visual aid, moving averages, it's under the moving averages. Others are above the 100. Bitcoin up here a little bit today, but it's become a big mess. Crude oil, relatively well. It's at this resistance, but obviously crude oil traders are still bullish, even though it's gotten whippy. Gold, plummeting here as where I move some things around here. And silver, which is at support, that's just whipping around. So that's not going to drop as much, but the dollar, it's kind of, up at the top of the range, and the euro, you can see just come down to support. We look to the left and it's turning back up again. So, the strength in the dollar may start to wane here a bit. Now that the euro is down here on the support. Australia, popping up, pound, down here. It's been down here a whole bunch of times. Clearly a place where buyers are going to step up again, and they are. So the dollar is going to back off, and that has implications for gold to some degree and oil. And let's take a peek at the ETF, which has more stocks in it than the cash. So that looks a little bit different, but overall. And well, I don't think we looked at the Russell. Got a little deeper in here, so a little more impressive, but it's just been a trading range. But overall, we continue to deal with a messy, uncertain market that is correcting. And I don't think that correction is over just yet, but we'll see how the bounce, how far it gets. And at one point it tries to turn, or the lack thereof. All yours, Dan.
Good morning, everyone. Yeah, so I was impressed with the close yesterday. Powell keeping the party happy. There's, I haven't seen one person lately who is agreeing with what the Fed's doing. There's another former Fed woman on CNBC. She's like, this is totally ridiculous what they're doing. It's not needed. And you all know I've been saying that for 6 months now. I was the first one complaining about it. But, Kramer said, yeah, but, Powell said, let the party continue. And so, the shorts don't want to stand in front of that. And I get that too, but we're pattern traders. And, Greg, you and I have been talking for months now about having to get more aggressive on these turns, particularly obviously when we get a market internal lineup. And I was saying all day yesterday, and the 15-minute charts are bullish all over the place. But the daily chart is not a swing pattern. And that's the conflict we were having. So day trades, but nevertheless, we gave some new trades. RCL was one of them. A beautiful breakout monster ascending triangle, Debbie. Ascending. I think I gave 6 new trades yesterday, all bullish. So, all right, where was it? So all our longs look fine right now. Actually, Greg, we got a call spread on GE. It's creeping up there. It expires tomorrow, so we need that melting ice cube. Hey, Rocco, let's look at. I got a big watch list here, even though there's not too many earnings. Let's go through them. Cream here, CRM. We've been watching this one for a while, and in fact, we traded it down here. We traded that little pop. Now it's gapping way up here. I would love it so much more if it were gapping right there to the top end of the range. And then that would be a tier 1 10-minute high trade. See that, folks? Gapping right just to the top of these real bodies. Maybe to the 20, whatever. But now it's gapping too big for me. But that's a put spread watch. Roku here, gap's too big, but bottoming pattern, it's up to 337. Well, the gap's actually not too big for a put spread. So this is a tier 1 put spread watch. So I have it there in the window right there, McGraw. Look at this neuro bottom right, bottoming. It's gapping up here to 14, 15 bucks. Yes, it's a big gap, but not excessive. Bullish pre-market. This might be a Reddit boy toy. I'm not even sure, but 30-minute high, this thing could go to 20 bucks, which $5 divided by 15 is 33%. Jim, it's always under support. With a big gap like this, it doesn't have to be yesterday's low. What I do in cases like this, Jim, I just go under at 15 minutes. Well, it's visual to me, Rich. It's visual. So a 22%, well, I'll come back to it. So Jim, to answer your question, I go under 15-minute support when I have a bullish gap like this. So, 320 would be ideal. If it were for tomorrow, I would even do 325s. Within 10 minutes or whatever, make sure the gap doesn't get slammed into. Rocco, that's a good question. Yeah, what Rocco's referring to is historically, and this is just based on 25 years of full-time trading, the true move after a Fed announcement, in my opinion, many times doesn't happen till 10:30. So it might bobble around and, and then if we take out 30-minute high, I got a day trade bullish bias. If we take out 30-minute low, day trade bearish bias. A swing bias, as always, will be dictated by the pattern. Okay, so Rocco, that's my preference. It doesn't mean it's set in stone for the same reason I gave 6 longs yesterday. We'll play it by ear as always, and it'll be based upon 2 things. Let's see what the markets are doing at the time, number 1. Number 2, let's see what pattern we're talking about. All right. So let's go back to neuro. So you said it's up 22%. Okay, you did the math. I'm okay with that. But put tape over these numbers, and it's gapping right there. Yeah, it's a big gap. It's a big gap. I get it. But as long as it sets up in the first 30 minutes bullish, it's to compare the size of that move, but the size of the gap to the candles, compare it to this one. So this one is not 22%. This one's a very small percentage, but the size of the gap from yesterday's close, the way the heck up here, is a big gap. So you see the difference? So anyway, things are visual to me, not necessarily, percent gap like that. All right, plug. I think we need to keep an eye on this for a core long bottoming pattern. Look at the daily, weekly. So it's gapping out of this base after a new low downside shakeout. So this looks fantastic. I'm going to put this on my other charts. We actually gave F sell as we sold the $6 puts yesterday, and we'll take assignment with a stop under yesterday's low. So same kind of thing, possible long-term bottoming, daily, weekly. Let me continue here. BBGI 293. So it wasn't a nasty downtrend, and look, it's gapping right over this pivot. So that'll make this a downside shakeout. So that is worth watching. 30-minute high. Pfizer, I read in the paper, the government's buying 500 million additional doses to give them away to other countries. This could be a downside shakeout, making the turn.
I'd love to know how much they're paying for one dose.
That's an excellent question. Google it. I wonder if it's public information. It should be, right? Anything the government does should be. It
Spending
should.
our money.
Yeah, Google it. So this is a bullish pre-market. It gapped to yesterday's high, and this is a buy setup with a 180 reversal. You know, maybe 30-minute high. We'll come back to it. Fresh. I saw in the journal was an IPO yesterday. Fresh, along with this Toast, were two IPOs yesterday. Same, I think, same sector. Let me continue here. BB, bullish gap up, but no pattern. Ear had I think a criminal probe. You know, I've been studying news, trading on news, and the things you want to stay away from on news events and bottom fishing are accounting irregularities and criminal probes. Well, it depends on the nature of the criminal, I guess. You know, inside and, you know, some of them you can overlap, but if it's a criminal probe involving, you know, cooking the books, which this one is, then stay away. Stay away. Don't, unless you're just day trading a climactic or something like that. KBH had earnings, but no pattern. You're gone. Fulton, bullish gap, maybe a put spread, 30-minute high. SCS, that's a nasty gap. Breakdown daily, weekly, maybe 30-minute low. Could be a short. DYNT, kind of a bottoming daily, weekly, monthly. You know, kind of looks like a penny stock toy, the way you know, every spurt gets sold into, so I have no interest. Rad, wow. Look at that. Nasty breakout failure, greater than 100% retracement. That's ugly. Oh, DRI. This was, let's see, hey, this would be a this is a bull flag. It's a little bit longer than I typically like, but here's your flagpole. Here's your 30-degree channel, bullish consolidation. You had a bullish weekly, but it's earnings, and it see, so you can do the percent gap, but it's excessive to me. I got, you know, I got no interest in a gap that big, unless it sets up in a couple hours and, you know, maybe a late day breakout. Overstock here. Looks great for a put spread. I was going to post a pre-market, but